Both the euro and the pound continued to rise against the US dollar as the fundamental background is almost absent. Risk assets are developing the bullish trend while the greenback continues to lose ground, even though the trading volumes and volatility are low due to winter holidays. This scenario is likely to persist until the end of this week. As for the fundamental background, the US released the housing price data yesterday, which showed a 0.3% rise. The report did not influence the market in any way, although economists had expected an increase of 0.5%. Regarding economic events on Wednesday, there is no sense in checking the calendar today as no reports are expected either in the Eurozone or in the US. However, the US will publish the Richmond Manufacturing Index for December, which is expected to decline to -0 from the previous value of -5. Still, changes in this indicator are unlikely to impact the bullish market. Keep in mind that amid low market volumes, any momentum movements in currency pairs can be short-lived and any rise or decline can be followed by a pullback. And now let's have a look at the technical picture of the euro-dollar pair on the 1-hour chart. Support and resistance levels are not very reliable now due to low market activity at the end of the year. Therefore, I will consider short positions on the pair only after the formation of a false breakout at a new monthly high of 1.1060. A failed attempt to settle at this level will serve as an entry point into sell positions, considering a correction to the level of 1.1015, where moving averages are located. At this point, I expect large market players to enter the market. A failed attempt to consolidate at this level will be a good entry point into long positions. If bears show no activity at 1.1060, I will sell immediately on a rebound from 1.1109, considering a correction of 25-30 pips. The same is true for the level of 1.0977, where I will buy after bounce, anticipating a correction of 30-35 pips. As for the British pound, bulls may try to push the price to the high reached on December 19th. A false breakout of this level will serve as an entry point into short positions. If bears plan to keep the pair in the sideways channel, they need to regain control over 1.2716. Its breakout and a retest will lead the price back to 1.2684, where the pair formed a nice entry point into long positions yesterday. Today I will also enter the market with long positions after a false breakout at 1.2684, from where I expect the price to recover back to 1.2716. If the pair rises at 1.2752 and there is no activity from the bears, I will sell on a rebound from 1.2786, considering a correction of 30-35 pips. Strong activity at 1.2716 in the first half of the day will also generate a good entry point into long positions. It is also possible to go long after a rebound from 1.2684. as the market volatility is likely to be very low today. That is all for now, and see you soon.